I will not bore you. I think you have heard our stories in the past, save for our visitors. So I'll just be, putting in snippets here and there. But largely, really what I want us to look at today is what are the lessons, especially for the REITs that are in the Kenyan market, the three of them that are operating. From an I-REIT perspective, I will not speak on the D-REIT. That's only Econ Wizarding at D-REIT, but I'll touch on that. But the question is, what lessons can we pick? And it's out of those lessons then that I hope, especially our brothers in Rwanda, in Uganda, Tanzania, where I know REITs are being considered, we're hoping then we can pick lessons and learn. And just like Zimbabwe did, you realize Zimbabwe came, learned out of Kenya, they realized where we are making mistakes, and I mean, those guys are booming, they are running. So for me, it's actually lessons, and I have only 4 slides. I didn't want to bore you with stories. Thank you. So I joined ILAM in 2022, but I was involved in the initial discussions of setting up Fahari. In 2013, I left Ruth to continue. I detoured, then I came back. Then I came back. So we're working with Ruth, and so I'll be sharing lessons from the market. I hope this thing is working. Yeah, it's working. Now, I wanted to just start with some simple graphs. Apparently, what we've been doing we've been also looking at the market structure, as well as the international market structure for REITs. Realize that REITs are formed from an income perspective. Actually, investors put in money in REITs for income. And many times, even one of the panels indicated that, of course, what we've seen in properties here, the terms of yields are relatively low. So when we are looking at this, South African REITs are at almost 10% distributable yields. When we looked at Kenyan REITs, and that's the statistics as of last year, we're really talking about averages of 3% or thereabouts in terms of yield. And so the question that I was asking is, if I'm selling that, even for us, because it's a question we wanted to ask for Fahari, so that as we look at the next strategic cycle, we're making the right decisions. We were wondering, if people are buying REITs for yields, what sort of yields are we looking at? So I think the market in Kenya, and if Fahari, we adjusted that for NAV, if our price was to reflect NAV, those yields actually mirror all the other. It's only that the price that is reflective here as of last year was slightly lower in the market. So it's not that we are actually any better than the other REITs in the market. But we are saying we are starting there, and the question is, what does this tell us? So when we look at the international market, say for the US markets, US is at 4.6% of average yields. Other markets from Singapore, Australia, UK, all that above 8%. So we have a lot of work to do as Kenyan REITs. That's why I wanted us to start that conversation. We have a lot of work to do, and actually that is reflected in that metric, the price of what we call the funds from operations. That's a metric that is used to do evaluation for REITs globally. Funds from operations is really your net income adjusted for interest income, as well as for any gains or losses you get from sales, from asset sales. When we look at that globally, it's like the PE ratio for stocks. You need to be at around, actually for REITs, the average is about 13, 14, max 15. For us, we actually looking at, we completely overvalued. The only other market, by the way, when we were looking at this ratio that is significantly overvalued was Australia, which was at 45 times the FFO. 45 times. All the other markets looked quite fairly valued. So again, from a market structure perspective, as REK, we have a lot of work to do looking at those two metrics. There are other metrics that we looked at, but I will not speak through them today because we don't have the time. But what they are pointing out is that as Kenyan REITs, even the REITs that are under formation, we need to start looking at those metrics. They are very key. Now, there are other lessons to pick, and especially on what would call innovative strategies that have been utilized by the various funds. And I was looking at the three REITs. Currently, from an income perspective, Econ is still the largest in the market. Now, north of 10 billion shillings, and it's growing. And it's because they have paired their REIT with a development arm. Same case what Zim, Terrace Africa is doing with Brett, where he started with a development arm as Terrace Africa, and that panned into actually the REIT. So that is the same model that Econ seems to be doing, especially in our markets, where we've realized, especially this market, this region, getting good assets, it's a struggle. If you get them, people want to sell to you at a 3-4% yields. They will not be looking at what an investor like me will be looking for. So pairing that for us, even as we're getting into this space, is to ask, how do we pair the development arm with the income side? And I am glad that actually Brett managed to go beyond and to launch the REIT in Zim. And you can see really the way it's growing and the pipeline, because he has pipeline assets, or the development arm has pipeline assets, which they are dropping. Same model that Econ has actually perfected in this market. And I think for any REIT, income REIT coming into the market, it's something that we could borrow. Econ focused on a niche market, and they have done a fantastic job in that space. You can almost tell their properties from anywhere, really. You can tell that's an Econ property, and it's just simple branding. So definitely, if you think about it, the brand stands out. You see that, you can tell that's a Kwetu, because the color, the dash of color, and the way the building itself is designed in terms of fenestrations and the windows and all that, you can tell, and it's not going far and above what you can actually do. So Econ has actually managed again to brand their properties and to make them recognizable. And when I speak about this, it's also the pain points I'm talking about, especially like for Fahari, where we say now we're struggling with, what are these recognizable assets? Can you recognize this asset and say, this is Fahari and this is, we need to get there. And so even for the other funds coming, those are lessons to pick. I mean, Econ has been, in terms of funding, they have done very well. We definitely cannot fail to speak about that. Just recently, you saw that amount of money they're able to draw from the Western markets. They've just paid off their board, retired Italy. Yeah, so Matthew, congrats. Yeah, but they are trailblazed in that space, which for us speaks to us that there is actually capital. It's how we structure our projects. You structure, and where you focus, there is capital actually to be gotten. I talked about the brand. The brand speaks for itself, even the properties themselves, wherever they are, this is an Econ property, for sure. For ILAM, I think we started picking these lessons, and that's why we were going through this restructuring process that our consultants who were assisting, the transaction advisors and everybody else, they are in the team, they're in this room today. But it took a lot of time, almost 2 years to sort out that restructuring, to delist from the main market and just to get into USP, where it's quiet. By this, surprisingly, I think a snippet in terms of data, do you know the unlisted REIT market globally is larger than the listed REIT market? You'll be surprised, but that's the case. Because REITs are very sensitive to, vagaries of the stock markets. And of course, what they do is they keep off investors from putting in new capital. So a lot of them in the US, South Africa, and elsewhere actually either in that USP space where the price is stable or completely unlisted, but still operating as a REIT. So that is something that we learned for us when we went through this restructuring to take it off the main market into the USP and now to focus on growth. But what we are doing for us really going forward is we've gotten promoter support. There's promoter support and us in this process. ILAM Insurance Holdings, which is our mother company, but the commitment they have given is actually to support this REIT to grow to a level that it will be attractive to any other investor. Because there's also a promise we made to the market that will be back into the main market board. So we'll get there, but we needed to be able to get a promoter or the promoter to work with us. And that's actually the focus of the next 3 years, is to grow. A lot of it might be driven largely by the promoter, but again, with the external, probably, investor support. But that was the focus of that restructuring. But we also want to focus on that yield, because we don't want the yield to collapse. So it's very key for us. Lab Trust, and Joseph Rono is here. For them, it was a very creative thing they did, because you realize you are in a situation where you need to, meet statutory requirements, especially in terms of asset class weightings within the portfolio. And they realized, yes, we can actually get into the REIT space, learn through this process. So they got into more like what they're calling a closed period, where the FAD now needs to take actions that makes the REIT extremely attractive to you and me. So improve on things like occupancy, deal with the cost structure, for example. They indicated, they actually greened, to focus on that sustainability component. So in that quiet space, which is speaking again to a lot of our pension schemes, which have a lot of assets, but they need to prepare them for the market. So that's what I think, if you think through for Lab Trust, that was the creative thing they did. Prepare these assets, make them ready to be actually picked by the larger market. So these are some of the strategies we could be picking, especially in our markets where we know we have these assets. But even as we talk about this, there are other lessons from Fahari. So for Fahari, I think what comes out, it's that size for REITs matters. Any day, anytime, because of the cost structure. Just the cost structure. Remember, REITs have 2 levels of cost. So the property level as well as the fund level. To collapse that fund level, you actually need to grow in terms of, the size. So for us, I think that should be the focus. And any other REIT coming, you can start small, but then you need to grow pretty quickly. Quality of assets. And when we're talking about quality of assets, it's from even the physical quality, ESG items or matters. It's to do with quality of leases, tenants, and all that. Quality for REIT matters. And you need to focus on quality. The other item which is so key, and I will not overemphasize, is return. Look at what the market is looking for. You are competing against T-bills at 14-15%, bonds perhaps slightly higher than that. So it's a structural problem that needs to be addressed. I don't know how, but we need to address that. The other one, and it's for real estate anywhere, that location, accessibility, and visibility of your properties. I talked about visibility. It's very key. Locations have to be locations that are defensive, that will be anti-cyclical, where you not lose tenants just because of the cycles. So these are key lessons we are learning and that we actually are addressing in Fahari. And then you need some sort of funding, especially on the delivery of projects. You almost need that partnership, pairing the development as well as the income. So these are some of the lessons that we've picked. I might not want to speak through this. I think a lot of this has been spoken through. But let me just talk about the capital stack for Kenya. When we're looking at this, surprisingly, just from the entities that are listed there on your right, on my right, I think it's on your right as well, from segregated funds, these are pension schemes, to NSSF, if you're thinking about it, going all the way to Chamas. there will be about 12 trillion shillings available in the market by 2028, 29, available for investment. Where is that money going? People are already tired with government bonds. People are tired, really, literally, you can tell investors are so scared investing in government now. Frank, you have a lot of challenge as well on the equity side. That market needs to grow. So we'll have a capital stack of about, and this is on the lower side, 12 trillion shillings. If you are located, currently we are at 0.6% allocated to REITs, currently. If you allocate just 2% of that to REITs, you will be looking at north of 250 billion shillings in REITs in another 4-5 years. So can we go out then as investors and form these REITs that are attractive to that capital? We are not looking for a lot of allocations. That will come over time. But if we just want to move from 0.6 to 1 to 2%, if we do that, especially with the growth that we are seeing with that capital stack, I am telling you for sure in another 5-10 years, we'll be talking about REITs that are like 1 trillion shillings. I don't know whether the assets are there, but also that's a challenge for us to go out and build them. So that was my story. Thank you. We'll be available for questions.